And that is Stanley Druckenmiller, Duquesne Family Office CEO. He's the founder of Duquesne Capital. And you manage that as well as a lot of Soros money. All at the I don't know how you did so much at the same time. If you don't know this man's record, and I'm not even talking about being the biggest philanthropist in the world, and I think, when was that, 2009, Stan? $800 million, but...
I can't remember about that.
Yeah, all right. Anyway, 30 years without a down market.
39.
Yeah, 39, but and average 30%.
30 years competing. We don't really talk afterward, but yeah, it is 30.
And I think after 30 years of not having a down year or getting 30% a year, you couldn't do it. I don't see how you could do it. You'd get up every morning worrying, I think, wouldn't you? And that's too much for anyone to try to beat.
There was a lot of luck in there. I had a lot of big drawdowns inter-year. It's just the way the calendar came out, so there was a lot of luck involved with that.
I've talked to you in recent days, and you had an interview that got a lot of play at the Economics Club. And so we'll start by saying, so 1,000 points today, or I'm sorry, 100 points a day would bring us up almost 1,000 for the week. So we've had a snapback. And I asked you, you sold everything. You said, you know, these headlines don't really necessarily cover the nuances of what you've done in the last couple of weeks, right? I mean, they said you sold everything and got in treasuries. That's not exactly what you did, is it?
No, but I did do a lot. So I was over 90% invested.
Right.
Fat and happy. Fed looked like they were going in the right direction, and the Sunday of the Trump tweet came in Monday. The market was only down 0.5 or 1%, and decided to go to net flat.
That was the first China. That was the China, not
the China
well,
tweet,
not the Mexico.
China tweet. I just kind of wanted to take a deep breath and process it. Net flat doesn't mean I sold everything. I kept all my long investments and used other vehicles to get net flat. The other thing I did was I bought a bunch of treasuries just because I wanted, and by the way, it took me 3 days. I wish I had done it all the first day, but didn't have the courage or the gumption or whatever. And yeah, that's what I did, and pretty much stayed there until the Fed repivot, acceleration, what you want to call it, Tuesday morning. I'm nowhere near back to where I was, but I've gotten a little more exposed during a week.
But you also point out, and you say a lot of it's luck. So, I mean, it looked like you said, wow, I'm going to ride these treasuries as they go up and the yields fall below. But that wasn't what it is. You needed to go somewhere and have big treasuries. And then all of a sudden, that was serendipity, and the treasury market just took off after you did that too, right? So it looks like another...
Soros used to have this thing called a one-way bet. What's a one-way bet? That's when you have a lot of conviction that something might not move, but if it moves, it'll only move in one direction. So I bought the treasuries thinking, for example, the 2-year, I think it was like 230 or something. If I'm wrong, it goes to 240. And you can envision a scenario where you could make 150 or 200 basis points. So I didn't necessarily think I was going to make money, but it was a great risk reward. And you're right, now that it's down to 185 or wherever it is this morning, it's no longer a one-way bet. You could lose 60, 70, still could probably make 150, so it's not like it's a bad bet, it's nowhere near what it was that particular day.
So you definitely sat up and took notice of what these tariffs might do to what you were pretty happy about, and that is deregulation, tax reform, animal spirits for the markets, all these things that happened in the first couple of years of the Trump presidency. You think this is enough of a headwind to really reverse some of all those positive things to where could we go into a recession? Could the market have a much bigger pullback than we've seen so far? Is that on the horizon? You still don't know?
Joe, the answer is I don't know. But I'm managing my own money, and I don't need to play every day. I'm not competing. And you said it perfectly. I think I called in right after my knee replacement, the day after the election.
You did.
And you guys were great. We had a discussion about how none of us understood with cutting taxes and deregulation why the market would go down because Trump had been elected. And I think we talked about animal spirits in that interview at the time, and maybe the economy could grow at 3% under this guy. And I wish I had followed my own advice more in action, but that's kind of what happened. And animal spirits is something you can't measure, but confidence matters. And you do wonder, and the Journal had a great piece on this, I think, Tuesday morning, you do wonder whether this is enough to kill animal spirits. And what do you mean by animal spirits? Well, for example, if you're a company and you're thinking about building a plant or doing capital spending, I mean, really? I mean, aren't you going to wait now, see how this thing is resolved, what's going on? But I don't know. If you calculate the tariffs, at least the one we've had, just in and of themselves, it doesn't look like it's that damaging. But at the same time, Ben Bernanke, who's a great mind, got a lot of IQ points on me, he thought subprime was contained. Because if you just do the math, same thing, the tariff thing doesn't look that damaging. But if you take all the other effects and confidence, and we've had a few more things down the road since then. We had Huawei, and 5G was going to be one of the great engines of not only U.S. but global growth. That's challenged now. We've interrupted that supply chain. Supply chains all over the world have been sort of twisted around. People are wondering. Then we got Mexico. That one came out of nowhere. So there's a lot of uncertainty. And I'd love to sit here and tell you I have a crystal ball, but I don't know.